rolling here. It might sound a little repetitive off of Sunday's webinar, but we'll talk about a couple of things. We may see some changes in the first 2 days of the week here. I guess to sum things up, in the post yesterday I wrote up, try to get the point across as best as possible that we should be looking. Let me put this disclaimer. It's not going to be an easy feat no matter what, because of the type of market and environment we're in. But since late last week, when sweepers showed up and we put in this low, we have to be on squeeze watch. We have to be. You have sentiment in pretty good shape. Okay. We could have short-term sentiment line up, maybe off of today, it will. So you can nitpick, but all in all, you got favorable sentiment as a whole. And we finally got some call sweeper activity. There hasn't been any, right? So, we were complaining we didn't have that edge, right? We didn't have that call sweeper edge even to utilize intraday. So we have a favorable backdrop for a squeeze, okay? You guys already, I'm sure you've seen that chart flying around of QQQ, short interest and shit like that. So you do have shorts and some hedges that can unwind. Okay. I really did, and that's why I wrote that up yesterday. I really thought that we were going to squeeze a bit today. Here we go again. This popping. I can't. I really thought we were going to squeeze again today. And nothing dramatic because we have, right? We have kind of a set downtrend here where, with no one really sees this market breaking out with a vengeance, especially in the straight line. So you got a little bit of wiggle room here, but I thought again, these are big moves. I thought we'd have a little bit of gusto today. And the reason why is pretty simple, and you have to accept it. If there was going to be a squeeze, it would have been because players were, assuming that Powell would have or lean a little more dovish than usual because of what's going on with the Ukraine and everything else, right? So he wouldn't be as hawkish. Worrying about the economy. The problem was this, right? So if that was your thesis for a squeeze, this took the juice right out of that. Logically, you can't expect Powell to, be much of a dove when you have crude, not just even at new highs, but ripping literally right in your face, So, and I didn't watch it as closely, but it kind of looked like once crude really started to get greased up to the upside, that's when equities kind of had a difficult time today, right? I also, with the strength of crude, you guys don't remember this because a lot of you probably are trading while crude has been a dog. You don't remember the times energy stocks and crude oil was the hottest thing since sliced bread. Okay. But when you have crude become a threat, in other words, the price action is too bullish, too strong, and it becomes a threat, inflationary threat, it will dictate the price action of the major indices for a short period of time. And I wouldn't be surprised we start to see that. In other words, you see days crude is down, right? You'll see equities lift and squeeze. And days like this today where crude rips, you'll see algos weigh on equities. Okay. And that doesn't last forever, but it can last for a short period of time. And where I remember there was a period of time you just watched crude. And basically, you had to know what crude was doing before you placed the bet. because it was, like I said, it was dictating what was going on a day-to-day basis then. So it wouldn't shock me, it wouldn't surprise me one bit with the recent strength in crude that we get into a period of time similar to that. All right. But that's what took off the table the squeeze today ahead of Powell tomorrow. For those of you who are not aware, Powell is at that, what is it again? Humphrey Hawkins event, and he'll be speaking. So a lot of us were thinking maybe a little squeeze ahead of it. All right. Aside from that, you have sentiment washed out. We'll look at a lot of things, right? But you don't have capitulation, right? So if you think that this ultimately will need to end in some sort of capitulative way, right? That's where most major lows, major bottoms are formed. And a lot of times what will happen is you don't get capitulation. Everybody thinks you bottomed, you get an intermediate term rally, but ultimately there's another leg lower in where players capitulate, and that ultimately is the bottom, right? So if you are on that team where, I myself think with the Fed against us, right? The Fed is not our friend anymore. The threat of inflation, and now, Russia at war and all this stuff. I gotta believe you're gonna have some sort of capitulation before this is all said and done, right? I don't want to get too much of a bias there where I'm waiting for it, and then some other signs show up where I need to start getting long and getting aggressive, right? AKA sharpies, get in, sweepers, continue to buy, that sort of thing. So I don't want to build too much of a bias waiting on capitulation, but I feel pretty good that there likely will be capitulation before this thing is over. And the problem with it a lot of times, guys, is when a lot of us on here want it, we're not getting it. We're not getting it, right? Because think about what capitulation is. When there is capitulation, us who are even looking for capitulation are ready to capitulate. You know what I'm saying? Like, that's capitulation. When you really can't make a case for a bottom and for stocks to start heading higher. So a lot of times you need a big bang news that gets stuck in players' heads and stays there for a while to make them not believe in a rally, even though the price action looks better, or just wear them out. And that's probably the worst case scenario, because that can take a toll on everybody. And it's unlike anything we've seen in quite a while, because we've seen really violent, fast moves, right? Things have bottomed and you've seen V-shaped recoveries. The COVID crash was, you blinked and you almost missed it, right? So we're more recent, we're used to that speed, but you can get those corrections through time that can really wear you out. They can really wear you out, right? So we got to see. We'll see. But those of you know, we went over Sunday a couple of things we're looking for as signs of capitulation. For those of you who are on Twitter and may not be members, you're talking about big spikes in the put to call ratio. Again, it's just, you're more than likely you're going to have that feeling too. Right? It's where news is at its worst. And news is pretty bad out there, but players are still looking for opportunities. So we'll see how it goes. All right. And like I said Sunday, for me, I hate to use the word, but I'm just playing right now. I'm not looking to get serious in any way yet. It's a good sign that we are starting to see call sweeper activity again as we, got out of earnings season. But for the way things are lined up right now, again, for me, it's either capitulation or the money that knows a lot more than I would ever know, sticking out their neck and getting aggressive. Like those are the only two things right now that would get me to get aggressive on the long side, and because honestly, anything else, like the only other thing that I would pay attention to is sweeper activity, and it's not there yet. Like, okay, you want to know what sweepers are buying, like you want to know what they're excited about. It's these commodity names. Right? Did you guys see the action today? Like today, I actually had an okay day because it was just so clean, cut clean and dry what they were doing today. Like they literally, I think, swept up every single gold miner you can think of the whole afternoon. Literally every gold miner. And this is not day one. They've been buying these gold miners for the past couple of weeks now, right? We talked about that Sunday. So those look great. And this morning, they went to their go-to commodity names off the open. And I don't know if you guys caught some of those moves or saw any of those moves off the opening bell, but you had names like Alcoa and Freeport look like internet stocks off the open. And, they usually don't trade like that. And they usually don't last like that when they're trading like that intraday. But that's how aggressive they were early on. Like, look at this. Like that. That's Alcoa off the open this morning. Okay? Look at this. All right? Here's Freeport. And again, this is not new, right? That's the problem. These aren't new ideas. These are not... we're not seeing sweeper activity show up in these names for the first time. This has been an ongoing theme, as most of you are well aware, right? Commodities have been really strong. These commodity names have been studs. The play, if you still like these names, is on dips, obviously. But it's tough to get aggressive, right? Even if you like these things off repeat activity when they've been up. Right? So you got to be patient, try to wait for dips, and you'll get dips. But that's the problem with sweeper activity here, okay? It's not like they're not buying anything out there. They're buying stuff, okay? It's just they're not buying anything new, and they're not buying necessarily anything risk on. It's been really selective. Now, we have started, again, I hate to even use that term because a couple of days of buying is really not, you really don't even know the true colors yet. Because again, we talk about this all the time. Markets are up, when stocks are up, when the market's up in this type of environment, okay, more than likely you're going to see call buying. You're getting shorts that are getting squeezed. You get forced buying, people just looking for exposure. It's in this environment, it's what they're committed to, what they're buying when they're up, down, flat, right? So for anybody who's been paying attention to the flow, you take a name like Alcoa, right? We see flow in it every week. Sometimes the stock is up, sometimes the stock is down, right? But there's that constant accumulation in the name. And, again, it's been going on for months now in that thing, right? So that's what we want to see in all the other stuff out there that's not commodity related, not inflation related. And, we've seen, again, you could count on one hand, right? A couple of hotels names and stuff like that. But it's been extremely, extremely selective. And we could be frustrated about that, but let's be honest, it's for good reason, right? Because there's a reason why they've been selective. And we should be happy that they've been extremely selective. Because if they've been super aggressive in new names, we would have got our ass handed to us here. You know? Yeah, and these things usually when they rally, right? We spoke about this, Cal. Usually it lasts. It doesn't go away. You know what I mean? Because they go into hibernation for a while when they consolidate. So usually when they're in vogue, it lasts for a while. You know, so very easily this could just be an ongoing theme that we just will continuously see. But again, there will be, and that's the thing, Cal. We got to keep reminding ourselves anyhow. Like there will be consolidation, pullbacks, and all that stuff. There always is, especially in these names. There always is, right? Like Brendan, you're talking about uranium, right? Remember, like uranium. What was going on? Remember when uranium was like really hot when we were playing some of those spec names? How long ago was that? That's back in the summer or something, right? And then it went into a little breather for a while. Here, right? So here's the uranium ETF. Okay, this is what I'm talking about here, right? So you get this big, huge rip, and then look what you got here. Okay. So my point is that, when you get up here into this portion of the rally, right? We talk about this all the time where, you see sweepers every single day tripping over each other. You got to be really careful not to overstay your welcome. Okay. Otherwise you could get caught in something like this, right? Or even half that. Right? Breathers. Okay. If you're bullish, right, like Cal has been, and he's been bullish these things for a while. He's been mentioning them on these webinars for forever, it feels like. You got to look for these breathers, right? That's where you look for sweeper activity to, for new entries, if you believe in that thesis and that theme. Okay, but there are always, these kind of breathers in a lot of things. Well, not all of them, but, a good portion of them. Energy names have been ridiculous. They've been ridiculous. But again, this is nothing new, right? Nothing new. But a name like Devon Energy, if the name wasn't Devon Energy and was SE or Roku, we'd be doing cartwheels over the action, right? But it's an energy name. And granted, most of us played it, whether it was tactically, swing trade, whatever. A lot of us have been in and out of these names, right? Exactly. So now, like I said, it's not new, right? It's not new. So we want to see, what's the next page, what's the next chapter in this story? That's what we're looking for here. Okay. And it might not be the end of this chapter is what I'm getting at yet. This chapter may have a little bit more to go. But the next chapter is either, you're going to have some sort of low or bottom in this market where even if you believe in this commodity theme, you're going to get a bear market rally in the rest of the market. You know what I mean? You're going to get a bear market rally in the rest of the market. You're going to get I'm talking about worst case scenario. But it's just a matter of timing and when, and that's what we're trying to pay attention to here. All right. So that's my view on the market itself. I'm still being careful here. I hope things get a little worse because we'll get the job done quicker if that's the case. My fear is that this can drag on for longer than we like. That's my fear. That's my fear. That's what I'm worried about, that this can drag on for longer than we like. And, it's going to test our patience. Sometimes we'll be able to deal with it better because we'll have other things to play. You know what I mean? Like commodities and stuff like that. But there's nothing we can do about it. Yeah, Lourdes, it can definitely drag on. And, you'll get these, right, that you can trade through and make some money. You know what I mean? But you got to be careful. You know, you got to be really careful. You can't get too excited. You got to be really careful. And you see what happens. Even when you get these intermediate bounces or whatever you want to call them, these relief rallies, they you don't, as far as individual names, you don't even know what names are involved. Right? That's been the biggest problem, I know, for me. Like I said today, it wasn't not even. I had a good day. I'm talking about dollar amount wise. I had a good day just because I felt like I had clarity today. You guys know what I'm saying? Like, there are days where I'm just sitting here and I really don't have a clue of what to do. You know, what to do. Even, okay, maybe the market will hang in there. I don't even know what names to buy, what groups to buy. Like, there are many days that I'm just lost in space, you know? And those are the days that annoy me the most. Those are the days that annoy me the most. Yeah, well, Jared, that's this environment. You understand? You can't beat yourself up over it. That's this environment. You know, you have to somehow, some way, find the ability to wait it out. When stuff is not making sense to you, whatever it is you're looking at, you can't just create shit out of thin air. You can't do it. Because, you know, we talk about that a lot. That there is a strong signal in itself telling you to relax and chill out. You know what I mean? That's just as good as a signal as anything else you may be paying attention to, telling you to take it easy. You know, it's crazy out there. Take it easy. So that's, you have to do it. You have to be able to battle through these times. You know, you have to. So, and then that's why, you know, I like to keep things simple and, right, it just clarity, having a clear head. And for me right now, it's as simple as either sharpies are going to get aggressive and get in and play the game, or, you know, I need to see capitulation before I really take a shot on any sort of reasonable overnight risk holding on, you know, building a position in anything. Otherwise, I don't see it. Now, again, everybody has different time frames out there. Those of you may talking about investing and purposes and all that stuff. I'm talking about, like, there, you got to acknowledge the risk right now that's out there, right? You always got a risk reward. That's what everything's about. Okay. When that closing bell rings and you go home for dinner, okay, there is elevated risk that you have no control over and you have no idea about, that can bite you in the ass at any given night during this time, right? Now, there's always some risk of that, but obviously now that risk is extremely elevated. All right, so you have to factor that in to the way you're playing. You can't just ignore that. You know, you have to factor that in. You can't, you know, get aggressive and then all of a sudden Russia blew up the Capitol building in Ukraine and, you know, we're limit down and you're like, oh my God, I didn't see that coming. Like, we can, listen, we're all degenerates, right? Because if we weren't, we'd sit tight, relax, and not complain about the lack of action or anything else. We're all degenerates. But that doesn't mean we want to stick our finger in the light socket, Lourdes. You know what I mean? We want to use our brains a little bit. You know, a little bit. No, I know. No, but you're right. That, maybe I came across the right way, the wrong way. You're right. You know, I'm saying we all want to play. You know, we love the game, but, you know, we got to do things to just be a little less of degenerate bastards. You know, we gotta fine tune it a little bit. Right. We'd be tactical degenerates, be a degenerate and play intraday, so you could utilize stop losses, size down, that sort of thing. That sort of thing. But, tactical degenerates. I like that too. I like the sound of that. But there's a lot of good stuff that's happening that we're going to overlook. If we're not overlooking it yet, we are going to overlook. Okay. This is a lot better than what was going on prior to this. Okay. This here, okay, it's a debacle. You don't notice it and you don't realize it. You don't feel it at the time. Okay. But it's a complete debacle because you know that this is coming and you're going to have to go through something like this. You know what I mean? It's the inevitable. So you need it to come, right? So now it's here and we're going to complain it's too long. There's not enough opportunities during it, blah, blah, blah. But if you want to see the light at the end of the tunnel, it's when these things come to an end. That's where all the money is made. That's where all the big winners come from. You know what I mean? That's where all the names that everyone's getting excited about at the top, if you're around and paying attention and you got some money, you're going to see some signs of that name starting to react early on, So there's a light at the end of the tunnel that's worth sticking around and dealing with this shit and not blowing yourself up in the process. You have to try to stay involved. You have to. The easy answer, like a lot of people tell me, well, just shut the computers off and go somewhere. Yeah, I guess you can do that. I can't do that because then when I come back, I have no clue. You know what I mean? I have no clue. How am I supposed to know what names they've started to buy into the heat of the debacle if I'm out on vacation somewhere? I'm coming back and you're talking about, forget it, how am I going to push any buttons? Yeah, I got it, exactly. It's almost like preparation for that. So like the conversation Lourdes and I are having, sometimes you gotta try not to be as big as a degenerate and stay involved without burying yourself. Right? Like we all have come to the conclusion, right, that in this environment right now, okay, it's extremely difficult to swing trade positions, right? Especially in options, short dated, whatever the hell some of you guys are doing, right? We all come to that conclusion that it's not easy. Right? You can make money, but one thing we could all agree on, it's a lot more difficult than other environments, right? So once you acknowledge that, once we all understand that, right? It's not like some of us are saying, no, this is the best time. I'm sure there are people out there, but the majority of us are saying it's a difficult time. We gotta relax. We gotta relax and wait. And wait. We gotta relax and wait. Because when it's over, it's a lot of fun. But here's all the good I'm talking about. Okay, here's all the good that's setting up eventually, whenever it may be, a couple of weeks, a month, or like I think Lourdes said, maybe going into the second half of the year. The longer it takes, the bigger the move, the healthier the move, the stronger the move is more than likely. But here's all the good that's actually being created here. Watch. Let's look at the Goldman thing we look at every Tuesday, right? You guys are used to this. And it was like looking at paint dry, right? If we weren't seeing much of any change there. Look at, okay? So now basically what you have here on these Goldman indicators, okay? The only thing that's missing is capitulation, okay? Why? You see this here? right? They're on the complete other side of everything else here. Okay. And what is that? These are flows. These are fund flows coming into the market every week. Okay. The fund flows have been ridiculous week in, week out. More money just comes into the market. I don't know where the fuck it's coming from. I mean, was there that much liquidity out there that they're just throwing money at the market in these fund flows every week? Apparently. But, and this is what, again, we were talking about this Sunday, right? What Bova Hartnett has been talking about. You can't have capitulation with this here, right? This has to go, right? At least the shorter term ones have to go in this direction, right? There's got to be outflows. No, there's got to be outflows. You know, we went through a period of time, guys, before COVID, before this shit, the COVID rally, there weren't any inflows. There was always outflows. Always. You realize that? There were never inflows, the complete opposite. Now, they came out of the woodwork. I don't know where these bastards came from. They just keep throwing money every week. Look, you want to see what it looks like? When you see this chart, your jaw's going to drop. I'm sure you've seen it, but watch this. Okay, just look at this chart. This tells it all. Watch this. Oh, it might be right here. Hold on. Hold on. I might have it right here. Hold on. It might be under tactical. I got to find keywords here. Hold on. Never easy for me, guys. Never easy. Where's Rubner, whatever is out? Oh, you know what it? Flow, maybe that? Flow of funds. Bear with me. Hold on. No. Oh, well, I didn't spell it right either. Yeah. I got it. I got it. Hold on. It's right here. Okay. You ready? Here it is. See that chart? That's what it looks like. Look at it. Okay. Now these are global. All right. So this is the whole world. But look at this. What the look at this. Okay. So here's what I'm talking about. See? You see all this? Like normal. Right? Like, look what's going on here. And I mean, do you think it's a coincidence that this was the biggest amount came in at the start of this year? Remember, we were talking about that. A lot of us thought there was going to be a melt up at the end of last year because of the money coming in January. Remember, we were talking about it. You think it's a coincidence that soon as all the money finally came in, that the market all of a sudden can't get out of its own way? You know, but it's crazy. It's crazy. So what you will see, right? Maybe you could even make it out here. Look, all right. And this will get my point across even better. Okay. What you will see is market rallies, money comes in, and then you get these corrections and you see how they shake them out, right? You see? Right? They shake them out. See? That's the definition of a shakeout right there. Okay? So that's why, like, Bova's Hartnett is talking about, we haven't even had that yet. You need that, don't you? Like every correction, that's what a correction does. It shakes people out. Are you going to have more money than ever coming in during a correction? And I mean, it'd probably be the first time. I've never seen it happen that way. Right? That's money, just more. It's not trading money, it's investing money. People wanting to put money in the market, Lourdes. Fund flow. all funds, all equity funds. You know what I mean? All equity funds. Money market levels. I saw money market levels didn't look too bad. Is it let me see here. And you know what's nuts? Okay. You see this here? Like this is through Goldman here, okay? Like that chart we looked at globally. Okay, so that's everybody, the whole world, right? Fund flow. Okay. You see, look, non-US equity funds, literally everybody and their mother was plowing into Europe. Okay, thinking Europe was the next United States. In other words, it was their turn to reopen, right? There you were earlier in the process, the whole 9 yards. You know, I mean, they're getting beaten to shit right now, right? And they're saying that you have a lot of money already starting to run for the exits there because of what's going on, right? With Ukraine. Right. I mean, you couldn't really factor that in at the time, right? I mean, yeah, it was always a threat, but not many people thought he was going in like that, and it bit them all in the ass. You know, it's kind of bad luck. Right? So, you know, the whole moral of the story there, guys, was that capitulation. Okay, if you're looking for capitulation, those are signs of. Oh, here, somebody wanted to talk about money market and cash. Who was asking that? It's right there. Okay. Here is bond funds. Like this, they've been starting to sell, right? Bonds. So this has been more normal. Yeah, we'll see. But you know, that would be capitulation. Yeah, we may not get that for a bit, but that would be capitulation. And this, right? This is the two easy things. If you're not a member, what you can pay attention to on your own. So if you're pooping your bloomers at the time, you can remember, hold on, wait, I'm pooping my bloomers, but Jesus told me maybe it's capitulation. I got to clean my bloomers and I got to start buying. Okay. This is the put to call ratios, right? You get them anywhere, just regular volume ratios. Okay. And yeah, you look at lows. What is wrong with these charts? Yeah, you want to see bigger spikes. Put it that way. Okay, you want to see bigger spikes. These trading view charts don't really do it justice, but you want to see bigger spikes. Okay, this here, look at this one here. This is back in 2011. That's too big, but you know you never see that. And so you want to see one that looks like this. Okay, that in other words, when do they come? They usually show up right when the market bottomed in late 2018, December 2018, right during the holidays, when the Powell pivot, right? You had a major spike in the put to call. Okay, not a lot of people thought it was never coming because the market continued to sell and the put to call was dead. People were saying it was broken. Okay, but lo and behold, at the very, very end, when everybody thought it was a lost cause, you had a major spike in the equity put to call. That would be one. That's what you would look for. All right. So those are easy things, just simple things you can get your hands on to look for that stuff. All right. And that's what I mean by capitulation, if you guys were wondering. All right. So let's look at some of the things here quickly. Okay. Because there's some interesting things. So you got the Goldman thing, right? You guys saw that. Here's something that's pretty interesting. Okay. This is not bullish. This we wouldn't put into the bullish category. Well, you know, somebody made an argument today that, and you guys let me know what you think. Hold on. All right, this is the stuff we look at, right? BOVA, client positioning. And they're buying dips retail. They're the only ones. They buy dips like it's no tomorrow. Okay. But what they've started to do now that's less all in bullish, like they're, exuberant, is they're picking names rather than throwing money exactly. Okay. So they went from, clumsy, bullish, right? Exuberant to just throw money ETFs. The market's going to bounce. It always does. To now, they're starting to find, they're doing stock picking. They're doing stock picking. Yeah, exactly. Okay. So again, what if you want to see that throw in the towel mentality that usually sets up major bottoms? Okay. You want to see them throw in the towel. This is not throwing in the towel yet. This is not throwing in the towel. All right. And the significance behind, you guys know the significance behind throwing in the towel, right, is that when you see that type of behavior, right, and you see that type of price action, you see it come up in the stuff we're looking at, everybody sold, right? Whoever needed to sell, whoever wanted to sell, sold. Okay. And what that likely means is there are no sellers left. You understand? Like, that's the logic behind it. That's why it works. And that's why it's important to pay attention to. Walter, I know that guy, Walter Deemer. Oh, I lost it. Where'd he go? Who was that? Trey? What'd he say? I know he watches breath and all that stuff. Markets in this type environment often bottom via forced selling. Yeah. Yep. Yeah, that liquidation type thing. They usually do. Now, again, truth, my fear, not even my fear, but what would be a pain in the ass is you can see bottoms, you know what I mean? Tactical intermediate bottoms for a while before you get that. That's the tricky part. That's the tricky part. Like this, right? Oh, you guys seen this chart? This is really, and this is why a lot of people were looking for a rally, which makes me a little suspicious. Mr. Mike Wilson, you saw this tree. I know you saw this. Yeah, 4,000 would be nice. This here, tree, you saw this? The Mike Wilson 2018, yeah. All right, so this is late 2018, guys. Okay, look at it. Now, I'm not a big fan of these charts because you can always make them look similar, in my opinion, but it does look similar. And this is what we were talking about, right? You get this drop, and then you get enough bearish sentiment out there that it's really hard to get that cascade sell-off unless you have a blow-up, right? You need that blow-up. Without it, you get something to this effect, where they wear them out, and then when they wear them out, then you get that. And this here, okay, is where you get capitulation, right? Because everyone gets spooked here. Then they have hopes that things are improving, right? Their last hope of things improving, and then boop, they give up, right? So, again, and this is what we were talking about on exactly, Presley, and what we were talking about Sunday on the webinar, right? What happened here? You had capitulation, you had sharpies, take off all the hedges, get all in. You had everything you could think of. BOVA, bull bear, green because of flows. They went negative. Everything. So what we have now is similar to here, sentiment-wise. That's what pretty much we have right now here. So you can get these tactical trading range type things. Would you say a lot of today's growth stars now are still buying dips? Yeah, there's a lot. I know there's a lot of people interested. I guess there's that much money out there. Yeah, it's amazing. You know what's amazing? The beating that these names, right, these growth names have taken, and there's still people that have money to, I guess with Bitcoin and everything else, they made a lot of money this stretch, right? It's got to be. It's got to be. All right, so you got the Bova bull bear. All right, a little bit of improvement. I'm sorry, the Bova clients, they're picking stocks selectively now. Okay, and this is pretty bullish. Okay. Oh, that's not updated. They're officially net short on this indicator. What I do is take my word for it. They're net short. Okay, so they're below the green line officially right here. All right, but you can't really make it out here, but you could see it's not a problem for them to stay short for a while, Now, I get this question a lot. Have hedge funds ever been net short since I'm following this indicator and make money? And the answer to that question is yes, once. Once, just once. You guys know what period of time that was? It's an easy guess. Exactly. Yep. But you got to understand, right? They made money on their shorts, but they blew up and everything else. You understand? So they had to aggressively short to try to offset losses that they had all over the yard. So, it's kind of misleading that they were all in short. It wasn't like they were just all in short betting on downside. They had to, like, I remember like Polyapatia, I think he was talking about hedge fund players that he spoke to during the time. They just every day had to short as much as they can to try to offset all the rest of their losses, because everything was blowing up. So every day they would just come in and short the shit out of everything just to try to offset some of the losses they had everywhere else. Right? Think about it, like real estate's blowing up, everything's blowing up. So they were just trying to short anything they could get their hands on. And things were falling apart. So that period of time is a little misleading. But yeah, to answer your question, that was once when, similar to now, they were short and stayed short in the market. Opening day canceled officially? I hate my life. I mean, this is so stupid. No? This is so stupid. I can't take it anymore. Now it's officially bunker time. Officially, they're going to strike. It's just ridiculous. It's stupidity. Forget it. You deal with COVID. You can't go to any ball games. All this shit now, and then they come back. They're going to take a hit too. Whatever. The hell with them. They don't worry about me. Like what's his name said in the Bronx Tale, Mickey Mantle's not paying my rent. Right? All right, so this is a good sign that they're short. Okay, so we'll see how that plays out. That's another reason why I thought we might get a little squeezy here. And we still can, but we'll see how Russia shakes out and the whole 9 yards there. What else? There was something else I wanted to show you guys. That we didn't talk about Sunday, but I'm trying to think. Here's what sector sentiment looks like. What indicator? Hype. I missed you. I gotta hold on. Let me. Oh, yeah. That's a cool indicator too. I'll go to that next. Yep. Yeah, robo retail only bought to open. What the call. So here's sector sentiment. All right. And you know, you kind of have a little, well, you have this here, right? The commodity stuff. This cooled off, so that's good. That's cooled off. What was the other one? Everything else looks okay. It looks good. Yeah, looks good. I tell you, some of these commodity names are catching good looking action though, which tells you these things aren't done. Later, Tree. Have a good night. Yep, definitely worth the wait. Definitely gonna be worth the wait. All right, so this looks better. Remember, we were talking about you had half these sectors that were hot, like financials. Look at financials. You pretty much got a buy signal now because of what's going on in Europe. And that's the risk here, guys, is that there's a liquidity event type of thing, right? Credit issue. You're seeing it in Europe. This. Yeah, and you're seeing put action in the banks. We hope that doesn't last too long. Otherwise, it could be a problem. So here is credit default. Here are the credit default swaps here in this country. Okay. So you can see we're coming from low levels, no big deal. We've been rising. And what people don't realize from my experience, even when they're rising, right? Even when the spreads are widening, you get horrible price action in equities. It's almost like the algos just automatically sell. Okay, so that's a problem. But a lot of concern in Europe now because of this Russia thing, and cutting off, all their finances and creating, some issues, that you create a problem and you get something like this. Now, the good thing is it happens fast. And then what's even better is when these things unwind, that's when you really start to get going on the upside. So I think the reason why we haven't been squeezing as much on some of these squeeze indicators we're seeing, usually you see some nice squeezes. I think there's just a lot of hesitancy, till people see how this plays out. Why would you stick your neck out right now with this shit going on and you have the potential of buying ahead of something like this? I think that's the main fear right now, right? That exogenous event, that's the main fear. Yeah. And, I told you, Lourdes, that I remember 2008. I don't remember much, again, because I was pooping my bloomers, but I remember sharpies because the market was selling off, okay? And there was fear out there, and sharpies just weren't buying the pull. And I kept saying, what the hell are they doing? And now, I'm almost like overthinking things. I'm saying maybe, there's so much fear out there that they themselves are scared and everybody is afraid now. You know what I mean? They wouldn't buy the pull. And, you find out at the end for good reason they didn't buy it, because there was something bigger at play. There was something bigger at play. So that's why, somebody mentioned earlier, it's a confusing time for them. I agree. And when I get confused, that's why I rely on stuff like this, because it gives me clarity. I'm never going to be able to figure this shit out. Of what? Looking online. Right? We looked at this Sunday. Okay. Just again, doesn't really tell us much now, but this is how sharpies played the 2000 internet bubble pop. All right. So look here, kind of similar to what we're seeing now. They stayed hedged for quite a while as the market was pulling. Ultimately, this was the first time they bought a dip for whatever reason, then hedged into these highs, and then nailed the bottom. Bink, bink. And then that was it. You know, so that's what I'm waiting for. I'm waiting for that. Maybe it could be, right? Maybe because world war is on the table, Moshe. That's a good reason. Right? That's a good reason. Yeah, maybe they're staying hedged because world war is on the table. That's a good idea. Yeah, exactly. All right. So, and if you're wondering now where they're at, you know, they have no interest. They have, oh, hold on. They have no interest in, what do I do with it? They have no interest right now in equities. This is the main indicator. And the reason why it's here is because the riffraff spec money is out. They capitulated. You know, but sharpies themselves are still hedged. So the only way this indicator can get up here is if they flip the switch. Do I have it here? Yeah, here it is. This is sharpies. You know, so look, they've been hedged since the summer, guys. Since the summer, for the most part. Yeah. What most changed you for a few weeks ago that you now stay away long term? Called June's buy, calls for a squeeze. Let's say something that can stay the same in sharpies. No. What? So in other words, the difference is right. Let me see if I got this question right. What you're saying is why did I put on some SPY exposure then, right? And why wouldn't I do it now, right? And for the simple reason that there's like, then you think about it, right? We had we had even better sentiment set up then than now, if you can believe that. Okay. And what I like to do is I like to get my hands on some overall market exposure. Okay. I kind of get that out of the way. And then now this way, if sweepers come in and start, right, it's almost like a feeler trade. Sweepers come in and start bombing names. I can, you know, I got some SPY exposure. I can add to it and I can start focusing on names, you know, if they hit names. Okay. What happened was the total opposite. We had a tactical rally. Okay. Lost some of that sentiment and sweepers ran dry. You understand? So there's no incentive right now for me to add to that position. That's basically in simple English why I'm not adding to it. Okay. So now that's why I'm saying what would get me to change, right? What would have me change my tune right now, right? With the information I have in front of me, I either need to see capitulation or I want to see Sharpies stick their neck out, right? Back then, when I put on that initial position, I was hoping that was a starter and we might get capitulation then, Moshe. You know what I mean? Who knew? I didn't know we were just going to rally from there and, have a decent squeeze from there. If we lingered there and got capitulation there, then we got the whole 9 yards. So that sort of thing. But like Lord said, it's kind of like a feeler position. So I have my hands on something, and if it all starts to unravel quickly, I'm ready. I'm ready. You know? See, and if you remember, like I rolled the position further out. You know, we spoke about that. The reason why I rolled I was concerned that we would probably come down and test the lows and have more work to do. You know what I mean? Exactly. So a lot of times, Moshe, what I normally would do, all kidding aside, is I would end up selling those April calls and lock in profit. And then you know what happens to me? The market never comes back down, goes like that, and I got nothing. You know? Later, Peter. So now that's what I like to do instead of worrying about that. Like the worry of that stressing me out. I just throw on a little position. Now, if I want to hold on to it, right, I don't think it's worth my while to sell it. I roll it out. I got more time, right? So I can survive this. So now, again, I can't predict the future. I don't know when sharpies are going to come in, Moshe. You know, I don't know when there's going to be capitulation. It could be this week. You know, and if it's this week, right, I have already some Junes, boom, I can add to that, and I start to pay attention to sweeper activity, see what names they're hitting. So it's kind of just like get the ball rolling type of thing. Get the ball rolling type of thing. I wish I did that into the COVID lows. I didn't do that, and I was pissed because I didn't have any market exposure then. You know what I mean? I had a lot of names, but it pissed me off that I didn't have market exposure. You have nothing, no Junes right now. If I got you right. No, I still have that June position. I still have it, Moshe. Yeah, I still have it. If I was going to sell it, I wouldn't have rolled, Moshe. I wouldn't have rolled. I still have it. You know, I still have it. That's what I'm saying. If we do get sharpies or capitulation or, you know, even sweeper activity that convinces me that there's at least an intermediate term rally that I can profit off of, I'm okay. I'll add to it. I'll be looking to add to it. You know, so that's the main difference. But that's a great question. What was here that's not here? And, you know, there are a couple things that aren't here. You know what I mean? Like future sentiment is not quite there yet. You know, a couple of the things I really wanted to see aren't there yet. They're close, but aren't there yet. And look, this is the other thing, Moshe, you can't predict. Did we know Russia was going to go invade Ukraine? You know what I mean? Right? To add even more fuel to the fire, right? So, you know, as the environment gets a little more difficult, you know, it's okay with becoming more picky, more disciplined. You understand? Waiting for more. Like I need something, I don't know about you, but I need something to get me excited to buy. I can't rely on me and my emotions to do it because I'll go bankrupt. You know what I mean? I'll go bankrupt. Like I need something to convince me that somebody who knows more than I do is sticking their neck out, right? If they're not doing it, I feel almost like a jackass if I'm doing it. Does that make sense? So it's got to be something. It's got to be sweepers just go bananas, right? Bazooka Joe shows up and we start to see multi-million-dollar sweeps, and it's, you know, clearly obvious that they're putting money to work. Or sharpies get in, right? They obviously know more than I do. They get aggressive. Now I have a legitimate reason to get aggressive, right? Or capitulation, players like us are throwing in the towel. So yeah, maybe I'm early, but more than likely I know that the downside is less limited than it was before capitulation. You understand? So that's what I'm looking for now. That's what I'm looking for. Yeah, Tesla, you know, there's the start of some decent flow there, right? So again, it's the start. We want to start seeing. It's got to be. It's obvious when it comes. It's obvious You can't miss it. Like I said, a lot of the names I get in during these environments like this, I don't want to get in initially. The sweeper activity forces me in. It forces me in. Sometimes even then, like an ass, I pass and I'm talking to myself. Yeah, forget it. Snap of a finger. You get a dovish Powell, okay, and you will have a melt up across the board. Equities, commodities will go ballistic if you get a dovish Powell. Exactly. You only need one of them. So it's never that. We used to crack jokes. You're CNBC markets in turmoil away from good times again. You know what I mean? It's never that far. It's never too far. So that's why now when things are tricky and frustrating, now is the time to just chillax. Okay, stop risking your money, chopping yourself up, and try to come up with a little game plan, and keep your eyes open. Yeah, watch baseball, exactly. You know what I mean? Keep your eyes open so you can see those signs of things starting to turn. Because from my experience, I'm telling you that more than not, when the turn comes, it's not like all of us are going to be all giddy to get involved. It's tough to get involved. You understand? It's not easy to get involved. It's difficult. And you got to have those signals that you pay attention to, right? All those indicators you pay attention to remind you, okay, right? So even if the news and the noise is scary out there and you can't find one good reason for stocks to go higher, but sharpies, they're all in. You understand? You have it. That's like slapping you in the back of the head. Listen, little guy, stop worrying about what you think and pay attention to what's going on here. They're daily reminders. They're daily reminders because it's not all the time, but more than not, it's extremely difficult to pull the trigger when it's the right time. It's not easy. It's never, you know what I mean? You don't feel good about it. Right? Right, Gordon? And think of it like the past. Think about any of the lows, right? We talked about COVID Sunday night. The COVID low, I don't care how many bull signals we had flying around us. It was nearly impossible to get long. Oh, so tough. I remember I was buying Trip and I'm like, I need my head examined. I'm buying, not only am I buying travel related internet name, okay, but it's a piece of shit travel internet name, okay, and I'm buying it into the heat of COVID, like into the heat of COVID, I'm buying this thing. Like I need my head examined. But the reason why I did it, one, all the signals were there, right? Sharpies were in, all the sentiment indicators were lighting up green, and sweepers were bombing those calls with time. I mean, bombing. Those of you who are around know exactly what I'm talking about. Bomb. Right? Bombing. So that's what I'm saying. You think I wanted to buy Trip? You think during the COVID crash I said, I can't wait to buy Trip? It was nowhere near my radar, this pig. Nowhere near it. Nowhere near it. But the flow forced me in. I had no choice. Oh, I hate this stock. Look what we were buying into. Okay? Look, this is what the chart looked like when sweepers started tattooing this thing. Look at this. Okay. So right here, look at this. Into this mess, I'm sizing up trip calls. Yeah, travel stocks are the worst thing you could possibly play. Worst thing. And this thing was an ulcer to own, too. You know? Look at this. Okay? I had to sit through this to watch. Oh my God, it's squeezing. Thank God I bought it. Right back. I sat through all this. All this. But I had time. You know, there were a lot of time on those calls. I didn't hold it as long as they did, and I should have, but you know what I mean? I mean, it was a crazy move. Boeing was another name. I don't think I've played Boeing since. You know? Boeing was another one. McDonald's. Like, you think of these names I was looking at? Look at McDonald's. That was an easy one. Bing, bing. They nailed the low in Boeing, in McDonald's, to the penny. To the penny. You know, they bombed it. One, we sold, I think we sold it the next day. God forbid we held it. Home Depot. We sold it the next day. We bought it and we sold it literally the next day for a nice winner, not a scalp. And you know the rest of that story if you hold on to Home Depot off the COVID lows. So, you know, but like I said, then, okay, it was difficult to do it then, and that's what probably made it right. But I couldn't do that without sharpies and sweepers bombing these things. I couldn't do it. There's no way. There's no way I could have bought these things, played these things. No fucking way. No way. You know, no way. Especially these names. You know, me personally, like Roku is something I could have bought the dip on. And that's why this thing can't find a bomb, right? Because this is something I would buy over here, and it's going to go down another 50% from there, right? That's me. That's how I think. Oh, Roku's on sale. And then, you know, and then it goes to $1. So that's why I don't trust me one bit. One bit, especially in this environment. One bit. Yeah, I'm in the same bucket with everybody else. Oh, let's look at Hype is talking about that thing. It is a pretty cool indicator. So this is what Hype is talking about here. This is retail. So you don't put the call. It measures just volume. Puts traded, calls traded. Right? This is a cool put the call indicator. It's a weekly indicator, but it measures, it fine-tunes it. Retail only, so smaller option orders only, and bought to open only. The problem with a put the call, right, is you don't know what's sold, right? It defeats the purpose. So you can't get an accurate read. That's why the only legitimate read of a put the call in reality is at a major, major extreme. You'll probably be right. Anything else, you're guessing, right? So this is bought to open only. They're buying and they're opening a new position in puts or calls. All right. And it works the same way. So it's going this way now. And what that tells us is retail has been opening new put positions more than call positions. Now, this has been a pretty good indicator. It's a weekly indicator. And you could see every time it gets up into this is COVID lows here, right? This is 2018 lows here. This is 2015, 2016. The only time it didn't nail the low was, you guessed it, but you had tradable lows there. You know what I mean? Well, this, you could call that maybe, that was final Armageddon. That's when I was in the bunker. It was locked and you couldn't even get a hold of me right here. See where that arrow is? I could have been dead for all you know. I was in the bunker with guns in hand, cash buried, dogs ready to roll. I was ready. It was a blur. And we made this point. It was a good point, right? On the Sunday webinar. Sharpies didn't buy this. They didn't nail the lows in 2008. They bought this. That dip. You know, so think about that, right? Think about in the heat of the moment. The market makes a low, it rallies, and everybody's thinking, it starts to roll over. Everybody's thinking, here we go again. The whole financial system is blowing up. It's blowing up, right? There wasn't a doubt in anybody's mind that this market wasn't just rolling over and breaking. That's what everybody felt like then, okay? And that's where Sharpies came in. And by the way, that's where Tepper, you know what I mean, came in too. Yeah, the Haynes bottom, that's right. The Haynes bottom. That's right. I remember that. And that's where supposedly there was a white paper on the Fed that they were rigging the game. You know? You think I was paying attention to that? Well, that's the story, my friends. That's the story. But yeah, I mean, just talking about flow quick, and then we'll wrap it up. The commodity names, man. Let me tell you, gold miners. Anybody in these gold miners? Anybody in the ETF? Anybody? Nobody, huh? That's how you know these things are still going higher. Nobody owns a gold miner? Gold chains? You're in miners, Jim? Did you sell them today? JD, yo, that's the one right there, right? That triple, I didn't even know there, I thought it was Nugget. I didn't know there was one on more than Nugget. Yeah. I'm going to start hitting this thing. I didn't know that this is triple. Nugget's double. Yeah, Cal, those WPM's a stud. You know, WPM's a stud. They really, some of these things didn't even get going yet. FNV, that's another stud when these things get hot. Right, exactly, Matt. This is another one, once it gets going, FNV can rather put them up and put them down. There were so many today. I know. I always say that, Stephen. How do you know what I mean? Do you just play the ETF? I don't. You got to get lucky, and sometimes you pick one that moves more than the ETF. You know, that's the way you look at it. Their names. There are a couple of them, Stephen, that we were talking about that have been seeing more flow than others. I don't know if that translates into bigger moves. Oh, don't even go there, please. All right. I'm the only one in America that ever lost money on a gold miner into earnings. You don't get bid on earnings. I'm the only one. I never heard that story in my life before. Anybody ever lose money on a gold miner into earnings? Come on. Tell the truth. It was me and C-Train. You guys know C-Train from the room. Ask him if you don't believe me. That was the last time, Rain. I played a gold miner for a swing trade, and I didn't even know earnings. Like I didn't even look. Who cares? And they warned. Okay? And I lost the money. And to piss me off more, the whole entire complex, all the miners exploded and went higher. That was the only one because they missed earnings or whatever they did. They cooked the books. There's C-Train. PVG. Here it is. Look. Look at this thing. It's moving now, by the way. Yeah, I'm telling you. Here. It was somewhere over here. This is probably it. The big gap down. Okay? I didn't think it was possible. SC train. We were laughing. We lost money and we were laughing. We're like, is this really happening? Is this really happening? Like, look, earnings. They've been earning 2 cents a quarter for the last 20,000 years. Will they miss by a freaking half a penny? Ridiculous. Yeah, those are things you can't factor into this game, right? There's nothing. What can you do about that? You can't do anything about that. Yeah, it's just bad luck, exactly. But here you got, first of all, you got the big guy, like if you want to play it safe, he's seeing action, Newmont. So if you want like the class of the group, the stud of the group, whatever the case, Newmont, then you got Barrick, which has been loaded with flow. Short-term flow, long-term flow, you name it, it's seeing it. And then you got the underbelly, which, again, you guys know more about them than I do. The WPMs of the world. Someone just mentioned it. What was it? There's two of them. SBSW. Is that it? Yeah. A lot of flow in this thing. I don't know why. Why is there so much flow in this, Cal? Do you know this name? Best of breed? For real? Shit. See? A lot of action in this thing. Yeah, exactly, Lourdes. Well, they've been running here now, so now you got to wait till they chill out. You got to wait till they chill out. And they usually chill out. You get a little consolidation at least. But I feel the same way with them. I mean, think about what happened to me, Lourdes. You don't think I feel the same way? Because, Cal, what my problem is like what Steven said. Like, usually I don't know these names. They all look the same to me. I don't know the difference. And I just play ETFs if I'm going to play. Yeah, see, I don't know anything about that stuff. I see the flow and that's all I know of them. So that's good to know. WPM FNV. That's good to know because those are two names I like. What other miners? There's one SSRM. Do you know that one? SSRM. Again, these are like the underbelly, the little smaller ones. HL. Let me tell you something. This one, they've been buying leaps in this HL. I feel like forever. It's a cheaper one, HL. Those are streamers, not miners. They make money by loaning money. Gotcha. All right. So Cal saying FNV, RGLD, WPM are the ones to stick to. Fred Hickey. Oh, yeah. I think I know who that is. Yeah, HL, again, it's been seeing flow for a while, even when they were out of favor. But flow has exploded in these things now. Exploded. Exploded. Yeah. I'm sure. You got to play these things when they're hot and that's it, FCX is copper. And obviously that thing's unconscious right now. FCX. Here's one, right? Remember we were talking about this? Zinc Tech. Look at that, new highs. Oh, FCX has a lot of gold exposure, huh? Yeah, Tech, a lot of flow. All these guys, all these miners and metals and, and now you're seeing big orders all over the place. If you wouldn't mind, where do you get the daily chart you post? New York Stock Exchange, that intraday flow. Money flow? Webull. Webull has it for free. That net inflow, I think you're talking about. Yeah, so all these miners outside. All right, so quickly, what's catching action that's not metals commodity related? Anybody interested in anything? We talked about, well, AMD Spider is more of momentum type players. You know what I mean? I mean, listen, for AMD to see notable action, right? Like something that's going to really catch our eye. One, it's got to be huge, or two, it's got to go through a period where the flow dries up, like back here. You guys remember when it was on do not touch list? Where was that? Here? Where? No, that far back? Over here. Okay, so here went through a period of consolidation and flow just dried up completely. And there was hardly any sweeper activity, very little. And then all of a sudden it started to explode here, right? So you have an edge. Like right now, off the flow, you don't have much of an edge. There's so much action in it. So I wouldn't put it in that category. It is catch and flow, but nothing noteworthy, I would say. Tesla has some interesting longer term flow. Mock, I get from a buddy. I can't think of the site, but my boy gets it. I don't technically get it, C-Train, but I got to get the name of it and I'll give it to you where he gets it from. Yeah, a couple of the squawks tell you it. You know what I mean? But if you want to see it live, there's a couple sites you could get it from, if that's what you're looking for. So Tesla, some interesting longer term flow there, right? Last week. So something to keep an eye on. This name continues to see action. They're buying the dip again. Hyatt, right? This Marriott, Hilton feels like they've been buying since the last summer. What else? What else? There's been accumulation in anything? Multiple sweeps. Anybody watching anything? I'm trying to think. You had a little bit of buying in like this Yeti, but more short term it was, right? Twitter had some interesting action today, but it's short term action. Look, I'm typing out the name like an idiot. It looks like somebody's playing for takeover chatter. That's what it looks like to me. They're cheap action, but definitely strange. Yeah, probably, Presley, probably. I'll tell you what we're going to see. You see like the flow in Tesla, Presley, you see how longer term with time, big size, that's what you start to see before they even start to look good. You know what I mean? Before they even start to look good, you start to see players, funds legging in because they don't want to buy it when it's already moving, So we haven't really started to see that yet, right? Like we're just starting to see some small signs now of anything remotely close to that. That's been the problem. Yeah, listen, there's been flow out there. I'm talking about accumulation like we were talking about, right? Like the hotel names, like the commodity names. where they're not just buying it when it's up, they're buying and building a position and showing conviction, consistency, that sort of thing. Some of the shippers are seeing action, right? There's some cheap action in a little guy. Is it FRO? Yeah, FRO. And that's been moving. STNG getting some play. So these have a little commodity wrinkle to them. Do you have any of these, Cal? Any shippers? Yeah, STNGs, no shippers. What happened? Oh, Valet, yeah. And Valet, Cal, remember we were talking about Valet? How this thing was shit in the bed here? Now look at it. Unreal. Unreal. Well, yeah, there's not much else, There's not much. Forget outside of commodities. There's nothing outside of commodities. What is that pair? I saw some action. Is that commodity related? Oh, that's the Viacom. Oh, yeah. This is a tough cookie, though. This is a tough stock. This is one you got to blindfold, hold your nose, and tuck it away, Cal. Yeah, you're longer term, right? Yeah, I mean, I think you'll be okay with it. It's just, this is what the problem was. That was the problem. So it's working it off. But yeah, this is torture. You just got to tuck it away. Nah, NVIDIA, we actually saw some put action today in NVIDIA, but nothing major. Nothing. RSX, we're seeing a little put action, but the best action in RSX, a lot of you guys saw it with me, was when it came in right before shit hit the fan, right? With the RSX. That was, I'll tell you exactly when. Look, I remember, I even, you know what'll make me find it quicker? I tweeted it out on my regular Twitter too. Hold on. I'll tell you the exact day. Here. So this is February 11th. Oh, God. All right. February 11th. Look at this. You want to laugh? Here's February 11th. How about that for timing? How about that? Yeah, a lot of people played them and sold them that day, but I can't blame you for that. Putin, right? The puts. Putin sweepers. Practice my drawing here. But yeah, that was well timed. Lourdes, you leaving? So what was that? Yeah, other than that, there was more put action today, but look at this, look at this. We're now down here. I mean, it could go lower. I'm not saying that. Here's the other one too. Oh no, Lourdes, I thought you were saying goodbye to me. I didn't know if you were talking to me. Yandanks. That's my Lourdes. Yandanks caught a beating too. See the banks? We were talking about the banks Sunday. They're tough, no? They're tough. There's some buying in Bank of America. But I mean, if Let me ask you a question. If JP Morgan goes lower, Bank of America is going lower. No? Yeah, you got Cal, a few reasons. Rates have been going lower, the Fed, and because of what's going on with Russia, they have exposure. And supposedly, like Morgan Stanley, right, has exposure. Yeah? Wow. Yeah, that's what Q I've been seeing in Bank of America. So in other words, they're protecting the short term and they're buying longer term calls. Yep. Yep. Exactly. Exactly. You know, the cyclicals look like crap. Again, maybe the hotels, they're seeing a little, if they start to see action on this dip. But this is nothing new. You just be buying the dip here, It's just the only thing that excites you that there's a bargain are the growth names, right? But like you guys are saying, you could very easily be really early there, and I'm saying for the big ticket, you could get a decent trade out of it. You get a little lucky, but they got work to do. They got work to do. What um, we want to see not only when they squeeze, they catch flow. When they come down, they're there to catch flow. You know what I mean? That's what we want to see. We want to see what we saw in snow after it pulled back. Remember, we were talking about this, right? So snow caught a beating, and then here they were buying dips. That's what we want to see. Let me see. I haven't even looked at these things. I haven't even looked at them. Let me see what you looks like. I like this U too. What about the other names I like? You know which ones? Bill. This thing didn't even pull back. Well, it pulled back and bounced. Look at this. How about MDB? Doesn't look too bad. Amber? Oh, yeah, that was a high flyer, Amber. Let's see, Amber. But, earnings? Earnings, huh? Damn. Yep. DT, that's another one. That's had a nice pullback. Still looks okay. Still looks okay. But that's what we want to see. We want to see these things like carve out a bottom here. And again, they on dips, they're buyers. Because what happens is when they're up, when they're squeezing, you don't know if the buying's real or not. You want to see them support the pullbacks. Those are real buyers. So it might take time. Just might take time. But there's going to be some big opportunities. And let me tell you something, even if it's not these names, there are going to be new names, guys, that we're not even talking about today, that have never seen flow, that are just going to come out of the woodwork one day or 1 week, and sweepers are going to annihilate them and ends up being a new leader, like a net. Mark my words. Whenever that time comes, I don't know, but it's coming. CS, the bank. Credit Suisse. Ooh. Oh boy. Oh boy. That's not good. DB had some put action today. That guy hit over the head today. Yeah. These financials, they're going to be the death of us again. SoFi popping. Oh yeah, 1370. I can't. I know a lot of you like the SoFi. I can't. I can't get. I can't get excited about it. Yeah, coin. I don't know. I mean, if Bitcoin gets beat up, Cal, what happens to coin? Does it go down with it? Probably does, right? It's like you're buying Bitcoin, I think. You know? Yeah. I don't know. I really, again, Bitcoin, you talk to the wrong one. I don't know. Like it. I don't know what the hell. Oh, yeah, they short coin as a hedge. Yeah, so it's the more trading in Bitcoin benefits coin. I mean, yeah, the more trading there is in Bitcoin benefits coin. Gotcha. I know like Goldman likes this one. Is it what do they do? Are they SI? Isn't this Bitcoin related? Rational markets went out the window. Oh, there's a Bitcoin miner? Jesus. Yeah. Again, guys, you know me. I rely on sweeper activity, and when there's not anything too excited, oh, that's what they are. A startup financing. They're not a miner, SI. That's right. I think they lend money. Yeah. Right. They're a bank. I'd read the Goldman note on it. They were all giddy on it. I mean, look, it's holding up. All considering it's holding up. I mean, look at the rip in this thing. Like, look at this. That's insanity right there. No? You see this move? Like, that's why they could sell blessings from Jesus, and I can't buy this thing up here. I can't. I can't do it after this. I can't do it. SI, he likes it? Nah, nothing in retail really. Kroger had a little bit of flow today. KR. I know Nordstrom was up nice off earnings, but just your normal earnings flow, nothing spectacular. Kathy's still doing her thing. She's still doing the thing. Casinos, there's been some buying here and there. Las Vegas Sands. Was it? Oh, there was a roll today. Wynn had a little bit of buying, but again, nothing that you're going to get all excited about. At least not me. Nothing. It's not too much, guys. There's not too much. Again, where these things are, Rain, like you don't remember. I don't think you were around. When they used to bomb this thing. They used to bomb this stock when they wanted it. Yeah, and now it catches action. You think they're coming after it, and then you never see it again. DKNG. This had a little short-term bounce flow. There's a lot of candidates that have the potential to see that action. That's what I'm saying. When the funds want to buy these things for real and they get excited, you're going to see bombs go off. You're going to see bombs. You're not going to see this little nibbling and dabbling here and there. You're going to see them come after, like they come after AMD, or they come after a Tesla or an Apple. That's how they come after it. Like, think about it. Like, that's like an Apple. Oh, not really. Apple's more, or an AMD that catches flow all the time, and then catches flow one day, and then you don't see it for 2 weeks. There's no commitment. Like, we don't even know if it's real. Could be shorts hedging. Oh, that's right, because the MLB. It's not down aftermarket. I would have thought it'd be down aftermarket. No, nobody cares about baseball anymore. It's just me. Nobody cares. Cologito. Nobody cares. All right, guys. I'm out of saliva. I think it's time to wrap it up. All right. So stay patient. All right. We're all degenerates. Find little opportunities here and there. Play squeezes nice and easy. But just keep the big picture in mind. You know what I mean? Remember, there's going to be a time when we need to remind ourselves this is the time to be bullish. We're going to have trouble feeling like that, but that's what we want to hang around for. Yeah, nice. I like that hashtag. Be good, everybody. Enjoy the night. I'll see the majority of you mañana. Yep. Be good, everyone. Have a good night.